Here with Jeremy Cutler, and one of the reasons I have him on today is because he was able to invest in crypto and use cryptocurrency in order to make enough money to buy a house. This is his first house they ever bought. He used crypto to do it. So, Jeremy, if you could tell me a little bit about how you got going with crypto and how it allowed you to be able to actually make a house purchase.
So I've actually known about crypto since high school, way back when, around senior year in 2011. And I used to just play around with it, just because it was there. And I always thought technology was cool and everything. But I didn't really get into crypto until about early 2017, right before the first big run. And at that time, I was still working back at Best Buy. So whatever extra my checks I had, I would just buy it because it kind of made sense. I don't really go with what the current economy has, and just traditional 401k normal stocks weren't really getting me the returns that I wanted. And I saw the potential in crypto to be able to do that. So I started off with what everyone should start off with is you start with just a basic like Coinbase or Gemini, just a really easy to use like GUI's app, and you can do recursive purchases or DCAing, dollar cost averaging. You pretty much buy a set amount of dollars that you're willing to put in, and you kind of just keep recycling on that over and over, regardless of what the price of crypto is. That way you get that good medium of a like average buying price. Well, what I did was I would buy a lot of Bitcoin and Ethereum, mostly going into it because they were the two biggest ones, and all these other cryptos were just, I wasn't there yet. And it wasn't until later that I started getting into more decentralized exchanges and stuff like that. We get into more risky assets, but with the risk comes more reward, basically.
Mm-hmm. Yeah, I gotcha. So it sounds like it took you, like you started around 2017 or right before the run up in 2017?
I started really heavily in September of 2017. The run started around November, like the big run. It was rising all year, but that's when Bitcoin first hit its all-time high of like 19,800, just shy of 20,000. And I was buying in a bunch of stuff. And at one point, I was already up almost 10 times on my initial investment. And, when you do that, you're like, oh, yeah, I'm smart and all this stuff. And then the crash happened, which was right at the beginning of 2018. So from Christmas down, I saw my portfolio drop up to, some coins are down like 95%. And that was rough, but I didn't sell. I DCA it. I kept buying in and then sticking with it. And then that's when I really moved away from more of the hype and went into just researching them, just looking into what's what and seeing all this, pretty much what are they trying to solve a problem that's actually there, or are they creating a solution to a problem that you don't need to solve? So it's just a lot of filtering through what you think is not worth it.
Yeah. So for anybody who may not necessarily know a lot about crypto, but they just keep seeing this opportunity that people are making money off of, and they're interested, but they're really naive and new to cryptocurrency, is there any advice that you would give them?
Obviously do your own research, but when people say that, they're really jaded about it. Do your own research correctly. Like, don't go onto YouTube and follow it all. Some of the YouTube guys are good. I don't really watch any of them, so I can't personally tell you which ones are good, but I know that some of them are more so on just following the technology versus, what's the big hype and what's all this other stuff. But honestly, look around for the coins. Like, if you want to get past the point where you're only getting into Ethereum and Bitcoin, first you really got to understand what blockchain is. So take a minute or two, watch videos on like what Bitcoin is or why it became and stuff like that. And you get an idea of why this stuff carries value. Because a lot of people are just wondering, oh, well, there's no physical asset. It's not tangible. Well, it is. It's just not tangible in the physical form. Mm-hmm. So what most people think about is when you buy, like, put it like gold. So when you buy gold, you're buying you're essentially trying to save your wealth. Like you're trying to hold on because the value of the dollar is just constantly going down since its creation, and since 1970s when they really moved away from the gold standard. The value of the dollar has been dropping constantly. So you want to find a way to keep what your current dollars are now versus 10 years later down the road when they're depreciated, like saving them in the bank or anything. So some people go gold, and gold is good. It's not bad, but they go gold because it does have a track record of matching and fighting inflation. But then you have something physical, something tangible that you can hold on to, and it makes you feel better. Bitcoin, in the sense, is the same thing, except instead of holding on to a physical item, if you want to hold on a flash drive with your private keys in it, but you're holding on to part of a 21 million circulation, 21 million ever created asset that is just physical code, but not in the physical world. If that makes sense.
Yeah. So, I mean, you could look at anything on the end.
Yeah.
Facebook is not a real physical thing. It's a social and technological reality.
It's just code. It's what it is. But when you're buying into crypto, you're not really buying. You own what you get. It's like no one else can take it from you unless they get your private keys. Which, number one, if you ever do any of this stuff and you make your own wallet, don't lose your private keys. Keep your private keys. That's very important. Triplicate them, put them in the safe box, do something that you won't lose them. Because the good thing about crypto and Bitcoin and stuff is that you become your own bank. The bad thing is that you become your own bank. So you are solely responsible for everything. There is no recovery. There's none of that. Like you mess up, you lose your keys, your coins are bye-bye.
Yeah.
So
yeah, absolutely. And that's one of the things I personally am doing. And all this stuff, as I always tell my viewers, is just our opinion. We can't predict the future. Nobody knows what's going to happen, but we're talking about how we've had success. I do a lot of crypto investing. Now, I keep it on the basic, on Robinhood and Coinbase and things like that. So I don't necessarily have the keys to my own.
So here's the other thing. I'd stay away from Robinhood. Yeah, not
a big fan of
Robinhood. They have developed a really bad track record with what they did with the pausing of trading back. And when you buy on Robinhood, you're not actually buying the coins. You're buying a paper version that they promise they'll give you. And you can't actually ever send the coins off Robinhood.
Right.
So if you were to buy coins on Robinhood and something were to happen and they went under, or they decided they didn't like your account anymore, they don't believe who you are, they can freeze your assets and you're not going to get them anymore.
Right.
They can just flick a switch and pretty much say no. Coinbase is good. Another one is Gemini. Gemini is made by the Winklevoss brothers.
Yeah.
Everyone's pretty much heard of them, but they've gotten to crypto pretty early as well. But their platform has less fees than Coinbase, and it's just another thing to use. They're really good. I like them. Personally, when I cash out, I use Coinbase Pro because it's the same thing as Coinbase, but it's for more seasoned people who understand how everything works, and the fees are much, much less than just regular Coinbase when you cash out and stuff like that.
Right. Yeah. And you would use the term earlier, dollar cost averaging, for people who don't understand that term. That is taking something rather than waiting for it to drop or getting excited and buying when it's high, just regularly.
Another big thing about that is that time in the market will always beat timing the market. So if you see Bitcoin is really high one day and you want to FOMO into that, and like, I'm going to buy this and buy this, just chill for a second. Set yourself up a recursive buy, or however you want to do it, $50 a week, $500 a month, something like that. Just every kind of like, think about like paying bills. So every week you're going to put $100 in the Bitcoin regardless of price. So if one week Bitcoin posts at 61,000, what it is right now, the next week it's down to 59, and then the next week's back up to 60, you're going to get the average of all those together. So your median buy price would be around 60,000 versus, even though you bought one at 61 was over, and then you bought one at 59, so you were under what median buy price is. When you come back in, your overall is lower. So it's a lot less stress than trying to time the market.
Yeah.
And if anyone tells you they know what's going to happen, they're lying. No one knows, because crypto is something brand new, and it's been around before 2009, but Bitcoin came out in 2009, and that's what really stuck compared to everything else. So yeah, if anyone tells you they're absolutely sure like this is going to happen, they don't know what they're talking about. There's only so much you can do with TA and current like market trends, because Bitcoin and crypto, they're not normal markets. They're 24/7. They don't stop. Majority of them, no one's controlling them, and the only people that are controlling them are heavily manipulated like whales. People have been in for so long or had a ton of money to get in. So yeah, crypto is manipulated like heavily because it's not regulated. But on top of that, a lot of things people they wouldn't want to crash their dollar pretty much. The only way to do that is that they send the money down with the plans of buying back to get more. So.
Yeah. Regulation is not make anything foolproof, and there's plenty of manipulation on regulated items, stock market.
So like if anyone that really looks more into it, you'll see about BitMEX or them with their leverage trading and how it's common practice there to somehow have flash crashes. So even though Bitcoin would be up, like $60,000, if you had a leverage position on a leverage long position, and at 53,000 your account gets liquidated, all of a sudden a big red wick will go all the way down, liquidate all those positions, and then suddenly come right back up. So the price never actually fluctuated, but because of something, I'm not going to go out and call them scammers or anything, but let's say someone sold a massive position and caused a ladder effect where one position will liquidate and causes the next one to liquidate, and it'll go all the way down and then flash right back up, because that's what the current price is. You just lost all your money for no reason. And that's another thing. Don't leverage trade. Leverage trading is a slippery slope, and it's straight up gambling.
So
don't do that.
Yeah. So and I saw just yesterday, Binance had a flash crash, and
on the U.S. exchange down to 8,000 or something.
8,000.
Like
that's right, 8,000. So if you had put in stop losses, which are things where you say to sell at a certain point, you lost a ton of money on that potentially,
and it just came right back up. So that's the other thing about like leaving your coins on exchanges. Besides security, Binance, I used to really like Binance, and they put in all the regulation and then banned me because I was US, but no hard feelings, I guess. So I don't deal with centralized exchanges anymore. But as for security wise, Binance has been hacked once, but they didn't recover what was taken, but they backed what was taken. So no one lost any funds except Binance. So for exchanges, they are a good one. I mean, obviously they're like the biggest centralized exchange, and they're moving billions of dollars, like no problem. So
yeah.
But learn about private wallets, how to make your own wallet, stuff like that.
Gotcha. All right. Well, I appreciate you coming on, Jeremy, and talking with us about this. It's just one of the opportunities that people can use to invest so that they can get to the point where they can afford their own house. That's kind of the goal of this channel, is helping people in real estate. And sometimes that means going into other avenues, such as investing in cryptocurrency. Thank you for lending your expertise, and enjoy the new house. I hope you guys really enjoy it.
Oh yeah, lots of renovations, man.
All right.
Take it easy, man.
You too.